Morning, everyone. Welcome to Ainsley News. It's Bitcoin Tuesday. Breaking consolidation ranges. We've had a strong few days here in the Bitcoin market. Bitcoin market's seen a stronger week, rallying off lows of $40,710 and breaking out of the consolidation range to a new local high of $47,649. That's US. This is the first sustained rally after many months of sideways choppy price action. The process of bottom formation and investor capitulation in a bear market is often lengthy and painful, and Bitcoin is still working its way out of the bottom. So let's dive in. One of the fundamental or foundational tools we use to assess investor conviction is the on-chain analysis as coin lifespan or coin age. Lifespan is broadly defined as the time since the coin was last moved. Statistically speaking, the longer a coin remains dormant, the more likely it is to remain so. Given Bitcoin's characteristic volatility, investors who hold coins for an extended time are more likely to experience wild price swings and are thus more likely to be experienced and have a higher conviction, i.e. they're going to be a hodler. As we approach the end of Q1 2022, we can see an extraordinary increase in the proportion of coins aged more than 1 year, which has risen by 9.4% of circulating supply over the last 8 months. These coins largely reflect BTC volumes accumulated in the Q1 2021 phase of the bull market, and the owners have thus held through 2 50% drawdowns and 3 all-time highs. This recovery is quite similar in scale and duration to the 2018-19 recovery. Whilst the charts we show you today through our news portal on ainsleyBullion.com.au show BTC volume greater than 1 year as a proportion of circulating supply, it's also useful to know how much USD is denominated wealth is held in these coins. The reality is that most investors make decisions regarding portfolio allocations concerning its fiat-denominated value and cost basis, and thus proportional US dollar value is very relevant. The realized cap hodl waves are the ideal tool for this assessment. Got a few charts in here show, and they filter these for the same 1 year or older coins. And we can see the following. Q2 to Q4 of 2021 had many similarities to past bear markets, where the total wealth held in older than 1 year coins reached a cycle minimum from May to December 2021. Bear phase 1, when a low proportion of wealth is held by older, more experienced investors, it means the converse is true, and much of the wealth is held by newer, less experienced investors, which is top formation and bear market material. Bear phase 2, this wealth disparity is recovering strongly as more coins transition into older than 1 year age bands, and more wealth with a higher cost basis is hodled, settling a higher fall market than the last cycle. The current market is in the process of recovering, or phase 2. However, it can be seen in past cycles this process can take many months for a price floor to fully form and find sustained upside momentum. The R-hodl ratio captures behaviour into a single elegant oscillator. It's calculated as the ratio between 1 week old and 1 year old realised cap hodl wave bands. It will peak when a maximum USD wealth is held by new investors, or market tops, and bottom when more of the wealth is held by 1 year age bands, then the market bottoms. We can see a macro downtrend is now in play, reflecting growth in 1 year older coins moving into a metric denominator. R-hodled currently describes a balance between new and experienced hodlers that is coincident with late-stage bear markets and also with early-stage bull markets. Note, however, that only in 2012 was R-hodl in a macro downtrend, whilst market pricing was in a bull market. Another oscillator that captures an impressive amount of investor psychology, one elegant curve, is reserve risk. This metric will trade at low levels when there is heavy investor accumulation, and hodling is the preferred market strategy. Conversely, it is extremely reflexive to the upside, requires a log scale, when these experienced investors exit their positions. Reserve risk has traded at historically undervalued levels for 77 days so far, although this is far shorter than the multi-year periods seen in 2015-17 and 2018-20. Note, however, that reserve risk generally signals undervaluation well into the bull market, as hodlers typically commence distribution only after a new price all-time high is set. To conclude, Bitcoin bear markets can be long, painful, and drawn out. However, they have the ultimate result of reshuffling supply ownership away from the weaker and towards stronger hands. Bitcoin has seen fairly heavy accumulation occur between 35,000 US and 42,000 US, suggesting many investors see a value zone in the current consolidation range. There is modest spending that has taken place over the past few weeks, which, with much of it being coins held at a loss. As a result, the aggregate cost basis of both long and short-term holders are in decline, the former to a historically significant degree. So far, the Bitcoin bulls have provided adequate support. So let's see if this continues further into the week and the month. It is nice to see a little bump up there with Bitcoin pricing, as well as a lot of altcoins as well. Jump over to ainsleywealth.com.au if you're looking to buy, sell or exchange any of our large cap cryptocurrencies today. If you're still interested in physical stuff, jump over to ainsleyBullion.com.au for gold, silver and platinum, and goldsilverstandard.com for heaps of information about our own blockchain/cryptocurrency built by Ainsley and backed by real gold and silver. Enjoy your Tuesday, everyone. We'll catch you tomorrow for more news.